CNBC TV 18.
Around 18,100 is where we have opened up at.
The Nifty is above 18,100, 18,120.
80 points higher on the Nifty is what we are seeing right now.
As we start the session, there is a bit of a cut which has emerged, right? I mean, we were looking at 50-60 points on the Nifty, but it's disappeared. Flat close after what was looking very, very good early on.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I am Reema Tendulkar and these are the headlines for the day. The Sensex and Nifty gained for the third day in a row. IT stocks lead the rally, but bank stocks lag behind. Mid-caps outperform blue chips. Some respite for Adani as 6 out of the 10 group stocks end in the green. MSCI defers the weightage reduction of Adani Total Gas and Adani Transmission to May. The index provider cites replicability issues for postponement. Despite this, the group sees its market capitalization erode by 3,000 crores today. The Indian government cuts the windfall tax imposed on crude, aviation fuel and diesel oil. Refiners, producers clock in gains on the back of this. Indigo falls 4% after 1.7 crore shares change hands in a block deal. Sources say promoter Shobha Gangwal is likely to be the seller. Promoter stake sale overhang hurts the stock, even though an interval of 5 months is needed between the sales. Bata says it will set foot in the apparel business to leverage its retail presence. This even as it eyes sales of 5,000 crore rupees by FY25. Meanwhile, a margin expansion pushes Nestle higher despite revenues missing estimates marginally. Apollo Hospitals also gains as brokerages turn positive on the stock. And here's what we have in store for you today. In Market Opinion, we've got Adrian Movad, emerging equity market strategist. In Corporate Voices, we have Gunjan Shah, MD and CEO, Bata India. Dalal Street gained for the third straight session in a row. The Sensex and the Nifty ended mildly higher to close at 1-month highs. The Nifty stays above 18,000 mark, led higher by IT stocks. Mid-caps outperformed the blue chips. The index ends with a gain of 0.5%. However, banks underperformed. The Nifty Banks ends the session with a cut of about 0.25%. Prashant Nair is here with the details. Prashant?
Well, it was a disappointing day, I have to say, because the market looked like it was breaking out, following through after 2 strong days. I mean, it opened with a flourish, but by close, not very much. It was a whimper of a day on the Nifty, absolutely flattish kind of close. A similar kind of price action on banks as well, which is up on your screen. Sectorally, there were more gainers than losers. So government companies, CPSE index did well. IT, mid-caps especially, I'll get to stocks in a bit. Real estate, metals, etc. are other areas which did relatively better. Small caps, broader markets, more up than down. Market breadth was positive, unlike what we've seen for the last few sessions. In large caps, names like ONGC, Tech Mahindra, Apollo Hospitals, Nestle, some of these, of course, are a continuation of moves which we saw yesterday or the day before. And as I said, in the broader market was where bulk of the action was. The defense names buzzed, HAL, BDL. There were Adani Group companies like Wilmar, Power, the mid-cap tech space, Emphasis, Nucleus, Mastech. There were names like PI Industries, which were reacting to earnings, post-earnings commentary, Tejas Networks, APL Apollo, and a bunch more. There were losers as well in names like Indigo, Adani Total, Adani Transmission. All cargo continues to see cuts. Loda and Campus were some of the others which saw selling pressure. The question is Nifty once again failing to break out of this range conclusively after hitting the upper end, as we've been pointing out. And I think the global context is important as well, because the debate is raging whether the US equity rally can continue with all the strong data that we have got recently. Back to you.
Thank you very much for that. The rally fading into close. In Market Opinion, Sailesh Bhan of Nippon India Mutual Fund says investors could find rewards in consumer durable space. Now the valuations have corrected.
Consumer durables are in some sense facing a perfect storm, after the rebound of COVID and all, and significant preponement in demand. You've got and now with higher inflation and, prices hitting the income levels and hitting the kind of consumer sentiment, you have seen a slowdown there. Clearly, these are some of the most underpenetrated categories in India and have a very, very meaningful runway. And like you rightly said, these corrections have made valuations very, very normal now. They are no longer those 40 times, 45 times, 50 times earnings on very strong earning expectations. There would now be 25, 30 times on very modest earning expectations. So the risk reward is certainly becoming very interesting in this space.
Risk reward turning more favorable and interesting. From a global market opinion, Adrian Movad of Emerging Market says India might face challenges if the Chinese economy recovers post-zero COVID policy. Listen in.
The problem for India on a relative basis in 2023 is if the Chinese economy continues to improve as we move out of this zero COVID policy, then I think that is going to attract capital, and a second largest economy in the world accelerating is going to be very important for Asia, particularly for North Asia. The fact that Chinese start traveling again is also very good for the ASEAN region. It's also somewhat positive for commodities as well. And these sorts of trends are going to attract capital within the EM space, and partly that's going to be funded by money coming out of India.
While many investors are waiting for Chinese markets to pick up pace, veteran investor Berkshire Hathaway Vice Chairman Charlie Munger is betting big on China. He says investing in China is worth the risk. Listen in.
Russia went into the Ukraine and said, looked like a cakewalk. I don't think Taiwan looks like such a cakewalk anymore. I think it's off the table in China for a long, long time. And I think that helps the prospects of investors who invest in China. And the other thing that helps in terms of the China prospects are that you can buy better, stronger companies at a cheaper valuation in China than you can in the United States. So you're getting the extra risk can be worth running given the extra value you get.
Let's get to the second headline now. There was some respite for the Adani Group. 6 out of the 10 stocks ended the day in the green. But the group stock saw its market capitalization erode by 3,000 crore rupees. Global index provider MSCI has deferred its decision to reduce the weightage of Adani Total Gas and Adani Transmission to its next review, which will take place in the month of May. MSCI cited its price limit mechanism as one of the reasons for deferring and postponing the decision. Vivek is here with the details.
Well, that's right. So in a surprise announcement today morning, the MSCI has actually intimated that the proposed changes that they had in terms of the weightage reduction in stocks that were part of the MSCI standard indices is now deferred to the May review. Now, talking specifically in terms of two stocks, Adani Total Gas and Adani Transmission, where analysts were estimating outflows of close to $125 to $165 million, the MSCI has cited potential replicability issues due to the impact from price limit mechanisms. What it basically means is that since these stocks have continuously been hitting lower circuits, the funds, the passive funds that track the MSCI index changes would be unable to make the changes on the back of the circuit limit filters that have been put in place. So on the back of that, they've gone ahead and deferred this particular change to the May review. Now, talking about Adani Enterprises, the change and the weight reduction will happen as per, what MSCI had earlier intimated. However, what MSCI has done is that this particular, from today onwards, the Adani Group stocks, remember, all of the Adani Group stocks, barring Adani Wilmar and NDTV, are part of the MSCI index. So, they will have a special treatment and they will continue to remain part of certain indices, barring the MSCI standard index that has the maximum tracking in terms of passive fund flow. So, on the back of that, the volatility continues, but some good news coming in terms of the stocks not being removed from this particular immediate index rejig.
Thank you very much for those details. The Union government has filed an affidavit in the Supreme Court on the Adani Hindenburg case. The affidavit, though, is only for the eyes of the judges, and it has been submitted in a sealed envelope. Ashwin Kumar is here with the details. Ashwin, the first question is, why was the affidavit submitted in a sealed envelope? And now what happens next in this case?
Well, previously, when the Supreme Court took up the matter for hearing, that is the time when the Supreme Court had expressed concerns about lakhs of crores of investor wealth that was wiped out, and subsequently went on to suggest an expert committee that will lead, that will review, as well as suggest improvements to the current framework for investor protection. Now, it is in response to that we understand the government has filed its response before the top court. But interestingly and importantly, this has been done in a sealed cover. So only the top officials at the Finance Ministry, the Solicitor General, and now the judges will be privy to contents of that letter, of that submission that has been put forth before the Apex Court. The question being asked by many is why in a sealed envelope? Well, in just the last hearing, the Solicitor General, appearing on behalf of the government, had expressed concerns that no potentially adverse signals should be sent to the global markets on account of this expert committee reviewing the current framework for investor protection. So that was a concern that was cited by the government. So on the back of that, what can we expect as a part of the sealed cover? Well, number one, the government is expected to, argue, to say that it is in fact open to the idea of an expert committee. However, with riders. What are these riders? That's number two. Number two is that the government is likely to argue and likely to submit as a part of this affidavit that the scope should be limited, should be very limited. The remit of this expert committee should be limited so as to not spook the global markets and the global investors. And the third is, it is likely to have suggested names of experts that can be considered as a part of this expert committee. That will essentially be the 3-point formula that will be put forth as a part of this government submission. But whether or not this will be made public, whether or not the government suggestions will be acted upon, and what the future course of action could look like, tomorrow holds the key. February 17th is when the Apex Court takes up this case for further hearing. And what's also interesting is that there's also a fresh application that is seeking a probe, not just into Adani on the corporate governance issues, but also into LIC and SBI on the back of their subscription to the FPO at significantly higher than market level. So these are issues that will be taken up for hearing tomorrow when the Apex Court takes up these petitions in the Adani Hindenburg case. Back to you.
Thank you very much for that, Ashmit. Let's get to the third headline for the day. The government has cut the windfall tax on crude petroleum by 700 rupees to 4,300 rupees per ton. Similarly, the tax on aviation turbine fuel and diesel was slashed by more than half. The news excited the oil producers and refiners alike. Sonal is here with the specifics.
Thank you so much for that. Well, yes, it's a cut that has come in this time around as far as windfall taxes are concerned, and that's why the excitement in some of these oil producers as well after the reported decent set of third quarter earnings. For crude oil production, it has been cut to 4,350 rupees per ton versus 5,050 rupees per ton. The bigger cut has really come in for ATF fuel. So on export of that, duties will be lowered to 1.5 rupees per litre versus 6 rupees per litre. For diesel as well, there has been a massive cut, and this is where refiners were seeing lower cracks, and taxes was adding some pain to that as well. So there it has been cut to 2.5 rupees per litre versus 7.5 rupees per litre. For petrol, it continues to be nil as well. So it has come in as a relief for the oil producers and the airline companies as well because of the lower taxes. So of course, all these stocks in focus today.
Thank you for that. Get into a break. We'll be back in a jiffy with the other headlines.